Let's turn now to a man who understands this issue perhaps better than anyone. He's the chairman and co-publisher of the New York Daily News. He's Mort Zuckerman, also the editor-in-chief and publisher of U.S. News and World Report. Mort, good morning to you.
Good morning. Do you like the bailout?
We had no choice. They are, in the classic phrase, too big to fail. This is not the end of the problem. Don't confuse the bailout with the fact that this might or might not be the end of the problem. The real problem is plunging home prices, so that when you have $5.5 trillion worth of mortgages, and many of those mortgages are underwater with record foreclosures and record delinquencies, it means the value of the securities that backs up these mortgages is going down, and it means the value of the mortgages are going down. The reason why we had to step in is that virtually every financial institution in the world had Fannie Mae and Freddie Mac paper, and it would have caused a systemic crisis to the world of finance, including the financial markets here. The financial markets serve the purpose of taking the money that is saved and that people have and lending it to the industry and to the commerce of this country. If that system breaks down, we're in for a major economic decline. That's why they had to save the financial system. But the fact is that housing prices are still going down, and going down big time, and this problem is still not measurable. We don't know where the bottom is. They're going to lose hundreds of billions of dollars in this bailout.
Okay.
Let me ask you a question, Mort. I mean, you have a tendency to look down the road in everything you do. So we are a nation where people do not save money. We are a nation in serious debt. We have a huge national debt. We are a nation with a huge imbalance in exports and imports. What does this bailout, the cost of this bailout, do to the burden that will be carried by our kids?
You know, that is absolutely a terrific question, because nobody tends to think about it. I believe that this is going to cost the federal government between $200 and $500 billion at the very least. And all of this is going to be added to the federal debt, and all of this is going to someday have to be paid off, and guess by whom? By our children and our grandchildren. And that's a part of the problem, that we've been running gigantic deficits in this country. We have had a terrible fiscal policy, and we are just accumulating debt, and it is one of the most serious problems, macro problems facing this country.
Are we destroying, I mean, is this another step toward the destruction of the credit rating of the government of the United States and the country of the United States worldwide? When those government interest rates go up, what it's saying is we don't trust the government as much as we did to pay off its bonds. And this is the American government.
I think the American government credit rating, by and large, will still be intact. It is still the bedrock of our whole financial system, and we can print money. Now, ultimately, this will
our currency.
you will erode the currency. You won't destroy it under these circumstances. But if we don't get some kind of fiscal management of this economy, Mike's absolutely right. We've had a zero savings rate. People thought that they could save out of the appreciating asset value of their homes. If their home values went up $20,000 in a year, they stopped saving. The net saving out of income was just disappeared. Now people are going to have to save out of income and not out of the value of their homes.
They talk about the debt problem. You got personal debt, you got corporate debt, you got government debt, you got deficits, you've got trade deficits, you got Social Security, and all these things. There's gigantic $53 trillion debt coming. I mean, we're headed right. It looks like you're headed right for the cliff. And how can you cut back the government that much to get anywhere near a balance?
Well, in the short run, we're not going to be able to do it, without question. The only way we're going to be able to do it is to force savings on the American people, and that's called taxes. And we may have to increase taxes, literally, to make sure that the federal government's credit rating does not collapse.
Well, what does that do to the economy?
That's right. We're going to have a very difficult economy going forward. You are absolutely right. This is not cost-free. This doesn't happen, and then everybody just goes on their merry way. We have a huge financial exposure. The federal government is bailing out Fannie Mae and Freddie Mac as they bailed out.
We're going to go in and save General Motors, Ford, Chrysler too?
No, I tell you what I do think will happen there, and I predicted this for a while. You're going to have a merger of General Motors and Chrysler and Ford. There'll be only two companies left within a year. The unions are going to have to make accommodations to this. Two of those companies will merge, and the other one will merge with some international company, because our auto companies are not competitive. They're not putting out products that the country wants to buy. So we're going to have to do something about it. And the legacy costs that these companies have assumed from all their pension and medical costs.
Are they going on to the federal government too? If they go under, they go right on the federal government.
In part, they will. In part, they will.
And
That's
where's the
exactly
federal
right.
government's going to pay off all this stuff? That's the taxpayers.
Yes, it is the taxpayers, but the alternative is worse, because we could have literally a complete financial collapse, which is what we had in the 1930s.
Who is responsible for this complete disaster?
Well, in terms of Fannie Mae, let's try Fannie Mae and Freddie Mac. We had the worst kind of system. The private shareholders made the gains when they were gains, and now the public takes the losses when they are the losses. And that was a political...
Who is responsible for oversight when you tell me, we may lose 200, 300 to $500 billion?
The Congress originally should have been involved in making sure there was an appropriate kind of regulatory control over this. But the Congress was susceptible to the huge... Well, it's the Congress in general, because they had the worst and most expensive and really the most disgusting lobbying efforts, as we all know, in Washington, and they were able to stop any attempt to introduce regulatory control over them. Larry Summers, who was the former Secretary of the Treasury, berated them for not going out and raising equity money. And they figured, why should we raise equity money? Everybody knows the Feds are going to bail us out, so we can still borrow money. And therefore the earnings went up and the stock went up, and then the housing market collapsed, and they collapsed.
Do you think any of the presidential candidates, either of the presidential candidates, can afford to tell the truth about our economic condition?
You know, it's a delicate balance. I do think the country understands something has really gone wrong with our economic system. And the reason why is that 68% of the American families own their own homes, and they have seen home prices collapse. They know something is wrong.
Not pretty.
And they're going to be responsive to somebody who at least begins to approach telling them the truth.
Yeah. Well, we're going to have to leave it there. Mort Zuckerman, thanks very much. We need you. He's the truth teller. We need you back, though. I think this is going to be a long road.
Not going to lose your home in the Hamptons, are you?
Are you?